This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
And stock of the day today, thought we'd take a look at Xero as a company issues $925 million in convertible notes. These notes will bear an interest rate of 1.625% per annum and mature in June 2031. Not sure it's that low, the interest rate. They should be listed on the Singapore Exchange Securities Trading. Through this operation, Xero says it aims to refinance existing note liabilities and raise capital for potential acquisitions, investments and general corporate purpose. The buyback of existing notes should impact the company's financial statement with a loss of around $5 million for FY25. Currently, Xero shares down about 4.5% at $126.08. Philip, they always say if you're going to raise money, do it when the share price is high. Xero share price is really high at the moment and been pretty strong for a while.
It's been pretty strong. I mean, it's I'd almost call it's been a market darling for a very long time since the flood. It's a recurring revenue software business. They migrated to the cloud or recurring revenue pretty early, one of the early adopters. And
every small business owner would need it
and you can't,
and use it with MYOB are the two big ones that dominate, don't they?
And it's hard to switch. And they showed in the UK, they put some, I think it was 7 to 8% price increases through recently, and they still got subscriber growth despite that. So it's obviously a good product that consumers are willing to pay for. I'm not bearish the global economy, so I don't think we're going to go into a recession anytime soon. So they should be able to grow their customer base ongoing, and if they can continue to put prices up, you know, it's a stock that probably never looks cheap at almost 60 times PE. It's eye-watering. But on consensus estimates, it is cheap. The consensus target price is about $155 per share. So if you believe that, there's around a 20% upside.
So back to those 5-year highs.
Yeah, back to the 5-year highs. And it's covered by a lot of stocks, so consider that a pretty much well-informed consensus. It's probably one where you just close your eyes at the PE. It's only one metric people look at in terms of investment. It's a quality company, good opportunity today to buy on a pullback. Long-term growth company, I'd call it a buy. Not cheap, but good buy and draw stock.
And the master stroke of Xero, Michael, is that they targeted bookkeepers, didn't they? Right. Rather than small business owners themselves, it's the bookkeepers they employ who look after 10, 15, 20 businesses to get them onto the platform. It was marketing genius when they started.
That's right. I mean, it just saved them a lot of time building up the customer numbers by going out to accounting networks and rolling over thousands of clients at once rather than getting individuals one at a time. It took them X amount of years to get to their first million customers, and then to get the next million after that was far quicker. So it's a business that really grow customers very quickly early on and maintain that rate of growth over time. They did a wonderful job in dominating the market in Australia and New Zealand. They then looked to sort of replicate that mainly in the UK, where they had a lot of success, but also in the US, where they'll never be number one in the US, but they have slowly started to build some market share there. It's a business that we had held for a number of years. We still have some clients that hold it, but we sold out beginning of sort of 2023. Probably roughly around these levels, maybe slightly less. It was continued to run up, but it's a business that we do like. We do like the fact that it is, low capital base. People always criticise for having a very high PE, but it only just really turned profitable over the last couple of years, and those earnings have been depressed for a long period of time.
And
as they
I
reinvested
admire
back in
them
the
for
company.
that, because
That's right.
during that previous time, tech stocks like this, the market was going, we don't care whether you make profits. Money was cheap, just build revenue, customer, da-da-da. And then all of a sudden interest rates went up. Investment market said, no, you've got to make a profit. These guys did. They responded to the market and market sentiment, cut back their research and development and their marketing. And I really admire them for switching. A lot of founder-led businesses don't do that.
And it was more or less in line with when they said they would. They turned free cash flow positive and profitable around the time that they indicated. So it's been proven to be a well-run business. The reason we got out, we were just starting to get a little bit nervous around their growth in the UK and the US and sort of what sort of margins that they were attaining from those businesses. And that's what kind of spooked us a little bit. Yeah. But it's a very high quality business, and if its most recent update was very good. So if it can continue to deliver those sorts of numbers, it's definitely one we'll look at. This particular instrument that they're raising money for, a convertible note kind of thing, it's obviously a cheaper way to raise equity or capital than equity, and it's also to use to buy back a pre-existing similar kind of note they already have in market. So it's getting hit today, but I think it's pretty relatively low down the list of interesting things for the company long term.
Right. So a buy or a hold?
I'm happy to go a hold.
Right.
We haven't got a buy in at the moment, but it's one that has been on our list before.
I'll double check that convertible note because
sounds low.
It might have a kicker in it. Convertible note at 1.6%. Sort of most convertible notes are around 10 at the moment, 8 to 10% for big corporates.
I didn't see the finer detail of it, I must admit, but it's definitely a convertible note to be listed on the Singapore Exchange.
Yep. All right, that's our stock of the day.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.